Hello traders and welcome to another video review. Today is Thursday, October 17th, 2024. So let's find out what's going on the economic calendar first, and we are going to start with the review of the Asian session. Exports data from Japan completely disappoints the market participants as they deteriorate to minus 1.7%, and the trade balance widened to the minus 294 billion yen. Adjusted trade balance is just a little bit better, minus 1 billion 900 millions yen. Employment change in Australia beats the expectations of 25,000 with the actual number of 64,000, and the full employment change increased to 51,600 people. Unemployment rate is at the same level as the previous month, 4.1%. During the London session, we got the ECB Macau to give a speech 10:15. Then we have the key event of the European session, CPI data from the Eurozone and the core CPI data from the Eurozone. The CPI is expected to drop from 2.2% to 1.8%, and the core CPI is expected to drop from 2.8% to 2.7%. The trade balance data, which are scheduled for release at 11 o'clock as well, are expected to shrink from 21 billion euro to 70.8 billion euro. 45 minutes later, ECB Macau will give a speech as well, and at noon, European Union Leaders Summit will start. The other very important event of today is the ECB interest rate decision. This interest rate decision is scheduled for release at 2:15. Together with the ECB interest rate decision, deposit facility rate is expected to be announced, and the marginal lending facility together with the monetary policy statement. The market participants expect the ECB to cut the interest rate from 3.65 to 3.40%. Core retail sales data and Philadelphia Fed manufacturing index together with the retail sales data and initial jobless claims are scheduled for release at 2:30. So those are the most important events during the US session. ECB press conference is scheduled for release at 2:45. Together with this data, we got other bunch of the data as well from the US: industrial production, business inventories, crude oil inventories, which are scheduled for release at 5 o'clock. And then, of course, we got the Atlanta Fed GDP now at 6 o'clock, at 8 o'clock, federal budget balance. And then we got some comments from the Bank of England Deputy Governor Woods, and at the end of the day, a Fed's balance sheet will be published. So it looks like the late London session, early New York session will be the busiest trading session today, because of the ECB interest rate decision and the USA retail sales and the initial jobless claims data release. So it's all about the euro and the dollar today. So let's just start our technical part, and let's just go to the euro-dollar chart. Right, so the situation on the euro-dollar is quite clear. We got the double top made roughly around 1.11 basically, 1.11 1.12 14 1.11 and this double top resulted in a big sell-off of the euro dollar. Right now the lowest level is somewhere around 1.0850. The labeling here, as you can see, is a big WXY time-consuming and complex corrective cycle. And this corrective cycle is, of course, not a part of this movement to the upside. Here, if we take a look a little bit closer, you can see that possibly this movement to the downside might not be that easy to label, because it looks like the current situation might be a little bit different than the WX pattern and might evolve into some more complex and time-consuming cycle, of course, from the Elliott wave point of view. If we zoom in a little bit, we can see that the current key technical supports are all violated. The lows from the August at 1.0858 are violated right now, and the market is apparently moving lower towards the levels seen in the beginning of the August 2020 24 1.0777, which is being marked by this arrow here, might be the low here, might be the low for the all of this movement. As you can see, this situation here looks very heavy, looks very bearish, of course. So let me just change the technical supports into the technical resistance. There you go. We got two more levels, at least two more levels. That might be of course considered as a technical resistance. Moreover, as you can see here, possible wave 4. Now this scenario was taken apparently out of the screen, but the good, let's say, good situation here is that the market is making a lower highs, as you can see on the euro dollar, and the momentum is making a higher highs, which means that we got some kind of a bearish divergence on a 4-hour chart between the market prices and the momentum. So it is apparently some sort of the indication that the pullback to the upside should be done pretty quickly. Basically, the market is right now waiting for the ECB interest rate decision, waiting for the ECB to either surprise market participants or to keep the interest rates or cut the interest rate on the level that is being widely expected. So right now, basically, we don't have to say anything else because the market is positioning itself ahead of the data release. So not too much is going on these days. Let me just mark this orange short-term trend line resistance, and then we can see what is going on. When this market will eventually break above this trend line resistance. It might be forming some kind of a wedge here sooner or later. The major technical resistance that will switch the situation into more bullish is at 1.1003. So that's the outlook for the euro to the dollar because of the situation with the US dollar. Let's take a look at the gold market, and then again we can see that the gold market on a 4-hour chart, after making the correction of 3%, actually, yes, there you go, 3.07%, the correction is now done and the market is ready to move higher. The bulls broke above all of the intraday technical resistance levels, and now they are testing the last week high at 2,685, and just ahead of the very important data release from the US, just ahead of the very important interest rate decision from the ECB, the gold market is testing the last swing high. Of course, it might be made. This might be a double top. Okay, so sooner or later, but for now we need to wait how the market participants will actually reconsider this situation after the market almost hits the extremely overbought conditions. So what do we have here is actually some sort of the short-term movement to the upside. You can see it here. You can see it. There you go. You can see it here. There you go. So apparently this movement to the upside does actually looks very bullish, but it, as I said, the double top might be made here and the market might reverse lower. The next target for the gold is 2,700 round number. So that's about the gold. Let's just talk a little bit about the Bitcoin, because the Bitcoin, as you can see on the 4-hour chart, just made the correction, just made the full 5-wave cycle to the upside. We can even see that the recent level, the recent high, $68,401 is right now, might be right now considered as the end of all of this impulsive cycle. The market has pulled back a little bit from this level. Still, the level of 6,415 might be considered as a technical, of course, support, but the market conditions are extremely overbought, so some kind of a pullback is widely expected these days, and we should see some sort of the movement to the downside very soon. However, the outlook remains bullish, as you can see. When we zoom out, the 68,000 is it's closer to the other levels located above the level of 70,000. Just at this one, 7,043,000 is the next target. Next technical resistance, very close to all-time high of $73,000. So extremely overbought market conditions. Now we should expect some sort of the pullback. Now we should expect some sort of the correction. The impulsive cycle looks completed with a very short wave 5, and when this is corrective cycle to the downside is completed, then we should expect the uptrend resumption. The key technical levels here in form of the technical support are located between $64,449 and $65,077. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.